Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you, with you. Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it. Oh my God, what's happening?
First of all this money by Wall Street is making me sick. 140% of
Hey everyone, sorry we had to start with that today because, well, it just feels like one of those days where you have to listen to it. Because the market's pretty dang red. It's pretty darn ugly. It is also very rotation-esque, very like 1 year ago. It's so 2020. Oh my gosh. It really is, though. It really is so 2020 right now. Volatility spiking 33% to some highs that we just haven't seen really since maybe February. About February here. Not only that, but you've got this massive rotation here towards what's really stocks related to COVID, vaccines, staying at home. You had a little bit of a piton push from Motley, but boy, oh boy, what a rotation. Look at this, Pinterest going up as well. Pinterest, Moderna, Rite Aid, DoorDash, DocuSign, Teladoc, Etsy, Wayfair. Boy, doesn't it just literally sound like we're back to where we were a year ago? It's pretty incredible. So I will say another thing, though, that is pretty incredible is that the market is doing much better than it had been earlier in the day. At least more broadly speaking, there were almost no green stocks when we opened this morning. And the fact that the market has found at least some form of a footing, I suppose, is better than having no footing. But, it's still a little bit intense. You know what I'm saying? So let's take a peek over here. AMC actually, let's see, AMC was obviously down quite a bit earlier. Where did it go? I thought I just saw it. Here's Tesla down 0.65. Yeah, there we go. See, AMC just turned flat. Isn't that something? Look at that. AMC literally went from about 10% to the dark side, down to the gutter. And just today made its way back. What a run on AMC here. In fact, let's go to the 5 minutes so we can actually see it. Look at this disaster here. Opens up, down, falls more, and the darn thing recovers throughout most of the day. This is why I was saying of the momentum stocks, GameStop, AMC, always got to remember you've got some serious hodlers here, which is very good because it can help reduce that momentum swinging to the downside versus something like, I mean, I hate to just continue to mention this one, but like a Torchlight, Meta Materials, you have certainly less of a hodler crew, right? But boy, it's a big rotation right now. Tesla down that 0.62%, massive rotation away. Certainly continued pain here in Bitcoin and cryptocurrencies, Ethereum and Doge, Bitcoin, all of them dropping a little bit. Pretty stable though over the last about 6 hours. See, we're on the 5 minute chart here. We saw this drop this morning. Saw a little bit of the recovery in the morning. We saw a little bit of recovery a little bit later in the morning, but we've really just been consolidating under our 31,000 support line here. And we are dancing above the 30,100 line. So that's not bad. But I ultimately here, there are a lot of people's portfolios that you probably just don't want to refresh today because there's just so much. Again, not as bad as what we saw earlier, but definitely pull back, definitely a rotation away from anything deemed remotely risky right now. That Newegg, the big, Newegg mostly being here for rotation purposes, momentum fade purposes. That's why we're seeing Newegg down, big digital going down with crypto. And then, of course, the recovery plays here getting hit. So we'll kind of see. We'll see how these prices look, how things are updated. I do want to listen to CNBC here for a moment. Let's see what they're saying for a moment. Let's give them a listen.
That we're going to bounce.
Yes, the grayscale expiration as well. We've talked about that, but absolutely, yes.
Katie said you're oversold on the near term. You could have a little bit of a bounce. But again, you're on the intermediate term stuff. You've broken down. You have a little bit more to go. What got us cautious was just that the euphoria that was going in February with the SPACs and all the IPOs, and then you coupled that with this massive move in the cyclicals. Remember last summer, Wolf, when we talked, nobody in their right mind wanted to be in the bank. I called them the banks and tanks, the banks, industrials, materials, energy. None of it made any sense because you still were in COVID. Fast forward to what was going on in March. You had rates spiking to 177 on inflation fears coupled with really strong economic growth. And nobody could imagine, wow, you could actually have a pullback in yields. But that's what we've had. Maybe now is a similar kind of environment where, you know, I've proven that I am not good at getting the bottom or top tick exactly right. However, I think from a timing standpoint, you want to look for opportunity because, again, the Fed has still got their foot on the accelerator, less or so maybe going through the rest of the year. There's still potential fiscal stimulus to come. We now know what a closed economy versus a somewhat closing economy might look like. It's hard to make the case that we're going to go back to where we were last year.
I just want to dissect,
I agree with
Tony, why now? This has obviously been bubbling up for a while. We've known about the Delta variant. We've reported on it every single day. We've seen what's been happening overseas in places like India. We knew it was coming here. So why today did we really get the real shocker where every Dow stock is down right now and we're down the better part of 1,000 points on the Dow? Is it because of the breakthrough cases rising and what that ultimately could mean in the U.S.?
Sarah, we've been doing this a long time. And you know, when situations like this, you're typically in a market situation looking for an excuse. And obviously, it's a horrible, horrible thing. The Delta variant has provided the excuse. But we look at it today like it's today. It's not today. It's the last 2 months. You've had a massive decline, especially on a relative performance basis of the economic recovery theme. That's what we downgraded in March and April. We downgraded the banks in March, and then we did the rest of the cyclicals downgrade in April, again, because things were too euphoric relative to what was expected. So why today? It's been happening for the last 2 months for all of these areas.
What would be your top sector pick for the rest of this year?
I mean, really, if it's been like the past 5 months for a lot of these areas, but okay.
Going into it, so this is going to sound, and again, getting there, not quite there yet, but financials, industrials, materials, and even to some degree, energy. So you have to make a case. There's two ways that the market really goes down more than 10% and stays there. A market event, we're kind of in a little bit of one of those right now, or the perception that you're going to fall back into recession. Now, I think that maybe people are worried about that a little bit, but I really think that's highly, highly unlikely with the liquidity that's around, which means we're in the middle of kind of a combination of the two, a little bit of fear creating a market event. And historically, like 2004 in the summertime of 2004 and 2010, you want to attack weakness. Sometimes it's painful to be, you know, taking profits a little bit early. It sure was.
I mean, I disagree with his picks, but I do agree with him. It is painful to add, and it's also hard to take some of those little profits sometimes.
Kind of a relative outperformer today, but still you're seeing pressure on the mega caps, the semis, Apple, Microsoft, Amazon, Google, weighing on the triple Qs.
So what typically has happened in the last couple of times where you had growth so outperforming value, when that started to reverse, value started to outperform not because everything was going up, but value was going up more. Basically, what happened is the growth stocks got hit. Both of the corrections that started in February this year and April of this year, it was really kind of things were weak under the surface of value, and then they finally got around and hit growth on higher interest rates. So I think that may be how this whole summer of indigestion ends, taking down some of the mega cap tech. But I think it's really important to differentiate which part of tech. Like if you look at the NASDAQ, less than 20% of stocks in the NASDAQ composite index are trading above their intermediate term moving average. That's a pretty low number. And again, signifying to me, there's been a lot of weakness over, especially last month, that is now culminating in kind of the news headline index moves.
Tony, Freedom Day, is this being billed in
This is similar to what we talked about. I posted a video a little bit ago, similar to talking about the 5 pieces of uncertainty that we have and when those might go away. So if you haven't seen that yet, definitely check out the other video. But let's listen in a little bit more and then go back to the sticks here.
coming from the UK to US equities?
See, I think this is where it's important to look at Wolf, where we are. Are we oversold? I mean, 2 weeks ago, it would have been a disaster. If you get oversold enough, it'll have been discounted. And I think that's what we have to remember is sometimes the market is a discounting mechanism, just like the 177 10-year note yield discounted awesome growth in March. I think at this point, I'm looking at it, it's a 118 on the 10-year. That's got to be discounting some of the slowdown. And I don't think the CDC announcement today that they're warning people about going to the UK, it's kind of filtering into the marketplace already, Wolf.
Mm-hmm.
Tony, thanks for joining us. Good to see you as always.
Hey, he actually had some pretty good insights. I didn't mind that at all. That was a good conversation. I like that. But yeah, I mean, look, there's some positions, for example, I have some positions where I look at my position, I'm like, okay, yeah, like I like a company long-term, but the valuation's high, or I'm in a company as a shorter-term trade where I'm like, I wouldn't mind holding it, but if I get an opportunity to sell where you take out some nice tendies, sometimes it's okay to do that. There's some untouchables that I really don't sell, Amazon, Google, Apple, Tesla, right? These are some of the untouchables. But yeah, I mean, otherwise, it doesn't hurt to take a little bit, especially as you're trying to position properly. But yeah, usually I'm a big fan of sell button is broken. Don't sell, certainly not when the market's going down, and continue to add. But finding that dip right now is interesting. I mean, look at Dave & Buster's. It just evaporated about 15 points here in the last, 2 or 3 months here? More. We're almost at 20 points down. This is a very, very interesting curve down. I want to take a little bit of an explorative look here at like even Win. Yeah, wow, look at this. Win is going to go under 100 again. Wow. And we had this massive real support line here around 68 for Win. And this was back in October and the summer. That's incredible. I mean, I don't know that I think we're going to go back to these levels. But boy, we're about to break through 100, and that's an important threshold as well. 102 right here. That's been a support level. 102. Here you get about 100, so it hasn't been really retested. 106, 108. That's gonna be one to keep an eye on. Not convinced yet. I'm ready to buy that. Here, I'm interested. Because here, this is what I've been waiting for is really this line here. So made some moves today a little bit, but this is a very, very good spot in my opinion. And look at the volume that we've seen on SoFi here. Now, keep in mind, one of the reasons you have this insanely elevated volume is because of those share lockup agreements. Lockups so crucial. You're seeing a similar thing happen, in my opinion, at Bitcoin. You've got those grayscale lockup agreements. So let's go ahead and take a peek over here for a moment. Let's see here what we've got.
And the stuff that led us down from the speculative highs, like you mentioned, the ARK funds, that's also what people are short. So if you just taking bets off, you're going to buy back your shorts and you're going to say, oh, they've already had their move down and we don't have to worry about that.
ARK Innovation, by the way, is a bright spot in the sell-off. Kathy Wood's ETF up about 0.25%, thanks to some of her stay-at-home plays like Peloton and Zoom. Yep. Barb, what are you doing today, if anything?
Well, Sarah, I actually bought a couple names. I may be a day or two early, but I think this is setting up for a good buying opportunity. I think any mention of COVID resurging kicks us into the PTSD mode. I mean, it was a pretty tough year. But I think when you look at the fundamentals underlying the market, they haven't changed. And that's basically the Fed, low interest rates. I still believe inflation is transitory. And so that this kind of action, I think is an opportunity because let's not forget where we are with vaccines. In the U.S. alone, it's almost 70%. Have at least one shot if you're over.
I'm going to pull on over to Fox quickly.
Industrials down 846. Don't go away.
Oh, gone.
The world's first fully autonomous vehicle is almost.
Yeah, by the way, if you want to make sure you always get an alert for the market open or close live streams or anytime I post a video, consider getting the Meet Kevin app. You can download it in Apple or in your Apple or Android Google App Store. It's totally free. And you get notifications there when YouTube doesn't send them. So it's really cool. So if you want to keep up with those notifications, get that Meet Kevin app, totally free. Okay, let's go back here to taking a look at BTC USD. All right, so we're at 30,700 right now. Let's get that screen shared here. 30,700. 30,500. We bounced off a couple times, bounced off 30,400 once. Really just consolidating them, but we've seen this sort of bleed out consolidation for a while. And see, again, the magnitude of the bars has really gotten a lot smaller, with the exception of here. No, we're actually, see, we did fall nicely here. So otherwise, we were really starting to compress, from big wild movements to smaller movements here. But now we're compressing and rotating to the downside. All right, let's see then what we have elsewhere. We've got, wow, BTX moving nicely, 21% here. Arcturus, 10%. Blue Apron's up 8%. Piton's still sitting up a nice solid 6% today. Upwork 5 to 6% here. DoorDash 4.5. Makes you wonder if today's really going to start this almost like rotation into recovery, or the stay-at-home stocks again. I think that's overplayed, but it's going to be something to watch. I do have a bunch of calls on quite a few of these. So I do not mind these rallying at all, because I will get rid of my calls and then wait to buy some shares, or maybe just buy some shares immediately. But for things that are rallying, I am interested in taking my profits on my call options. So Norwegian Cruise Line's down 5.51%. Yeah, this is it's been pretty consistent with where we've been throughout the day here. Amran, Simon Property Group, yeah, mostly consistent here. I'm just shocked the 10 years plummeting as much as it is. Let's go on over here to CNBC for a moment, and I'll pull up a little bit more info.
We've seen some shorter trips and delays, but no major cancellations from the big 3 cruise lines or outbreaks. I think that's an important reminder as we watch these stocks fall. With that said, Florida does account for 20% of all new COVID cases here in the U.S., so these coming weeks will be seen as a big test for the cruise lines and their safety protocols. Another distinction I would make when looking at the hotels and vacation rental stocks, yes, all the major hotel and travel operators are trading lower, but I would call out Airbnb. You guys were just talking about Peloton. It is down, but it's down less than some of its travel peers. And remember, Airbnb was one of the beneficiaries during the pandemic, although this year it has lagged a lot of its travel peers. Bookings data, guys, from the hotels has remained very strong here in the U.S., so that is giving some hope to the bulls out there for those travel stocks.
Seema Modi, Seema, thank you. Barb, I know
the news is a broken record. Yeah, you don't say. It's pretty much been the same thing, I feel like, on loop today. I'm actually purposely trying to look for new news, because we have had such commonality in the responses here from media. All right, so we have stock sink. Yeah, all right. Virus worries fuel flight to safety in markets wrap. Let's go take a peek here. Stocks slumped around the world as investors rushed into haven assets after the Delta COVID variant cast a pall. This was actually similar to what we read this morning. I think they just retitled. They literally just retitled the top. It's the same thing. That's crazy. I don't even know that they added anything. Oh, they just added the numbers at the bottom. That's lame. Half a dozen IPOs led by Robinhood launch a summer boom. Ooh, IPOs. Robinhood filed on Monday with the SEC to start the roadshow of its $2.2 billion IPO, 5th largest listing this year. That's not its valuation either. That's what they're looking to raise. All right, so record IPO year. Yep. I think they're trying to... Here we go. There we go. Price range. I think they're going to be at a valuation of somewhere around 40 billion is what they're going for. It's going to be interesting. So $38 to $42 for Robinhood. We just got those numbers today, so that'll be interesting. Dole is going public. Power School, Riskified, Snap-on. Wow. These are going to be some interesting IPOs here. I wonder when they'll IPO. Maybe we can see Robinhood IPO date. Let's find out. Oh no, COVID passports coming to a place near you, France. 100,000 protesters against the new vaccine passport laws take to the street. Wow. Let's see here. Robinhood. Will we? I don't. Okay, they chose NASDAQ. I don't know when we're actually going to get Let's get rid of this. There we go. We don't exactly know yet when it might actually go public, but we're getting close. We are getting public, or we're getting close to going public. So that's pretty exciting. Mike says he's buying. He's buying Robinhood. Not sure if you answered this question already. Can good earnings reports, especially in retail, Target, Amazon, Walmart, be an indicator for inflation to come if there's still a supply chain issue? Ooh, it's very interesting. I expect numbers for retail to be very good, but I think the market's going to move off guidance. So I think it depends exactly what the executives say, and that's very difficult to predict. So, for example, if you have the CEO of Target or even one of the other executives at Target that says, hey, we're starting to see demand wane, and at the same time, we're starting to solve our supply chain issues, well, then that might actually promote the transitory argument, right? Now, if they say, hey, we've seen some moderate improvement, like increase in pricing, the consumers seem willing to pay that. Yeah, but good news is we're seeing supply chains catch up. Well, then maybe it's a little bit of both, right? So I'd be kind of curious. Let's see. Really? That's interesting. Hold on a sec. So does it do that? Let's go to 3 years. Target's website analytics are really bizarre. Yeah, it does. Around January, it must be just like everybody like returning stuff? That's interesting. Yeah, you get this like big cyclical boom at Target. Target.com. Look at this. Because if you just go to the 1 year, you see this sort of plummet here in activity. But then you see this very typical kind of cyclical boom, which makes sense that you would see it around Thanksgiving and Christmas time. But I'm surprised it lasts so long into January, almost into February usually, as its sort of sales cycle before it starts waning. Hey, but it's up, up, and up, right? Mostly. So this bottom was a little less. But anyway, and this was 2020 here. Actually, nice growth here. So we'll see. We shall see. But good question. Thank you for that. Have you heard about the debt limit suspension expansion? Yeah, they always kick this stuff down the road. I don't let that make me nervous at all. Hard to buy the dip on this dip when levels haven't been retested or established in some sense. Yeah, totally. I agree with you. I think there's more blood to come. Yeah, and that's why I've been pretty cautious about my strategies and my spending strategies, trying to save as much as possible, which I know is super like anti-Kevin, but hey, you got to change with the market.
General, if we're talking oil stocks, whatever sector you're talking about, are too volatile and too unpredictable. I mean, I think a month ago we were talking about OPEC, and OPEC had no publicly announced plans to do what they're doing, but here they are. We're going to flood the market with supply gradually, but because they don't know what the demand will be. So, and I think given that the energy stocks have outperformed since last November, they were the single best performing S&P sector in the first half. All the best news, recovery worldwide is pretty much in the stocks. And I think in general, there are long-term structural challenges here, not the least, with renewables slowly but surely taking.
Somebody says she sounds like she's talking through a fax machine. I was honestly wondering, I'm like, yeah, is my headset broken? So, well, thank you for that. Oh, man. Okay, so, yeah, we were definitely talking about the strategy there of selling puts and buying calls on the same. Let's get to Finra Margin. Thank you for bringing this up. Did those come out? I thought they came out on the 21st usually. Did they come out early? June. Yeah, they're not out unless they just came out with the June numbers. Is that possible? Oh, yeah, that would make sense. Oh, well, they must have just come out with the June numbers. And I know it's 2021, but I always thought they came out. I guess it makes sense the third week of the month. Yeah, look at that. Margin just shot up again. Ooh, gross. I like that I do not have margin. Cash balances went up slightly, though. Very interesting. Very interesting. We're going to be over $1 trillion in margin debt soon. Also kind of scary. That's going to be nuts. All right, so we got about 4 minutes to the close. Ooh, Blue Apron really moving into the close here. Piton's still moving into the close as well. Upwork, tiny little slip there towards the end. Etsy's also up 3%. Nice. Good moves today. we'll see what happens with these tomorrow. Now, if these keep running tomorrow, that could be an interesting sign for a lot of these, or they don't keep running. We'll see what happens. The market overall, I feel like, ended better than it started, which is a good thing. All right, let's listen in here for a couple of minutes.
Not lead, because they're very late on that call. They're the official group that dates recessions and declares recessions. Mike, I just want to bring up the Olympics for a moment, because that is coming up within days. And there are now, 57 positive cases, 58, excuse me, people testing positive relating not just to athletes, but there were a few high-profile athletes, 2 South Africans in the Olympic Village on Sunday. I mean, that's a pretty high-profile example of what is happening with the Delta variant. I wonder how much stuff like that factors into the psychology. You remember when they canceled the NBA?
Yes. No, there's no doubt that all of a sudden it brings it to the attention of everybody in the world, because the whole world is watching the lead up to the Olympics. So on the other hand, when we did cancel the NBA, that was when the market was already a mess.
That's, it's actually, I'm just thinking about what they're just saying. They're suggesting that Delta is having more of an impact on Olympians right now, and that makes sense. We have a bunch of athletes who have COVID potentially, or do, and I'm trying to translate this to the stock market, which, see, the Olympics are very public, they're very watched. In some sense, it is entirely possible that the Olympics amplify our fears over the impact that COVID 2.0, the Delta variant, will have on the stock market, which means potentially you get folks too fearful and too uncertain up front, and they potentially start hedging their positions with more puts, or they sell earlier, or whatever, and they resist from buying earlier. That we could see a lot more damage coming to those recovery stocks, and potentially some of that money flowing into stay at home. After stay at home, usually tech rises, because tech's not always stay at home, right? Oh, somebody just tagged me that Robinhood is set for 10 days from now for an IPO. Nice, cool. But the amplification of COVID via the Olympics, just talking about COVID, because you can imagine the reporters are just gonna be sitting there talking about, oh, they got COVID, oh, they were going, something to keep in mind.
1%. All 11 sectors on the S&P 500 are lower, led lower by cyclical names. Energy down 3.6%.
There's the bell. So Imam says people in the stock market are smarter than that. It doesn't really work that way, because people think they're so smart in the stock market that they outsmart themselves by trying to assume what everybody else who's obviously dumber than they are is going to do. And so then the argument becomes, oh, okay, well, if people are going to think that, then let me try to act on that before everybody else does, right? And so in a weird way, you do get this very herdish moving stock market. And this is why I think I have a lot of respect for Kathy Wood, because she holds very firm. Now, when prices go up, she diversifies her holdings. When prices go down, she concentrates her holdings into her highest, biggest bets. I think it's great. I like it. But she stays bullish on what she believes in, which is awesome.
So we did get a little bit of a rally into the close off these low levels. Every sector was down, though. Energy, the hardest hit.
Yeah, look at that. Dow down 2.09, S&P down 1.58, NASDAQ 1.06, Russell down 1.51, BTC also obviously down. Let's go ahead and take an actual peek here at our sticks. So we have, Ocugen, Moderna, Blue Apron. Blue Apron, nice move here into the close. 8.7, that's awesome. Virgin Galactic, really good recovery from some of those lower levels here. And Peloton settling there at 7.14. Very good day for Peloton. I think that's wonderful. We had a really nice opening on Peloton, and it just kept moving a bit, which is very, very cool. Pinterest, I've got some options over here as well. 3.84, we'll take it. Etsy got options over here as well. We'll definitely take it. DocuSign. Oh, look at this. GameStop went positive today. Very, very good. And again, this is what I was saying about the strength of the AMC GameStop play. It's more than a typical momentum stock. It's like an amplified momentum stock. But you are seeing some pain at, for example, AMC. Now AMC did obviously rally into the second half of the day, or through the second half of the day, which is wonderful. If you go to the day chart at AMC, kind of interesting. You kind of have like it's still a very momentum-esque sell-off, which we're seeing right now, but it's a slower sell-off than you would normally expect from momentum stock. Oftentimes, momentum stocks are straight up and straight down. Just for a couple examples, let's see. Here's MMAT, just a super quick example. I don't know if MRIN has finished selling off yet, but it's also accelerating down. But we knew these two were going to sell off before they started selling off, just because of them being propped up by momentum, right? Anytime it's propped up by momentum, usually it's going to come down again. And then I'm trying to think of another one. I can't think of another one right now. Oh, well. Margin calls today? Oh, gosh, I can only imagine. Yeah, I got no margin. Don't care. That's why, like, I look at my Tesla 2023 calls, and I'm like, I don't really have to look at these until the summer of 2022, because the theta decay starts getting pretty ugly. Probably fall of 2022. It's already there. It's already present, but it's hodlable. As long as we get some movement here, that'd be nice. If we just stay flat for another year, it's going to be a bit of a problem. Because the theta decay does add up. I mean, you could lose 40%, which is crazy. Just trading sideways. You don't have that problem with owning shares. Keep that in mind. So you don't want to go too heavy on those leaps. Some people, I look at their portfolios and they're like, oh, Kevin, look, I'm all leaps. And I'm like, oh my gosh. Like, yikes. But hey, scary. All right, what else we got here? Xpeng prices new sedan at 24. I know, I saw that last week. Is insane how low they were pricing. It's incredible. All right, let's go ahead and see what's winning right how After Hours is moving. Remember that 40% off coupon code down below does expire in 3 days, and the price goes up as soon as it expires, or the next morning the price will be going up. All right, let's see what we have here. So Pinterest, Canadian Solar. This is the After Hours. See, this is interesting. After Hours, we're getting a little bit of a sell-off in some of those stay-at-home names that were doing well today, I believe. Yeah, we've got Pinterest. Well, then again, maybe not so much. I mean, Pinterest really being one. Microvision. No real consistency yet in the aftermarkets. A little too early to tell in the aftermarkets. We'll see how this explores. Let's hop on over here for a moment.
Rising yields. Eventually, I think that would be another sector I would be looking at. But in the meantime, hiding out in things like tech, which can depend on organic growth, it makes sense to me why the NASDAQ outperformed on the downside today.
But Barry, your year-end target on the S&P, 3,800. So I guess you feel a bit vindicated today, and perhaps more importantly for our viewers, you think there's quite a lot more of this to come.
Well, I think we'll hit that 3,800 or so before October is over. If you think about the long-term view, I agree that there are some positives, but it's kind of like paraphrasing Mike Tyson. Everyone has a long-term view until they get hit with a correction. We've seen China tighten enough.
I don't know about that. I think that's jaded. Everyone has a long-term view until they get hit with a correction. I mean, I could maybe en masse you could say that, but I think most of us who have our hodl positions, like our favorite longs, we're looking at these, unless of course they're call options. We're looking at these shares as by the dip. It was like March of 2020. It's like, did I dump my Tesla, Google, Apple? No, I bought more. Did I dump my Tesla? No, I bought more. Some things you trade in and out of, but that's just called portfolio management too.
Negatively. So yeah, I feel very confident in the call we made, and we prefer the defensives, not the growth stocks where you're going to lose 3 points of PE on account of the financial conditions index tightening in the next month or so.
Oh, fear mongering.
The dollar
must be a shorter.
Well, we have seen it creep back up to levels we last saw in March of this year. Is that a big risk factor for you? Is that a sign that investor mood has totally shifted?
Well, I think if you look across the board today, whether it's yields declining, the dollar going up, currencies like the Swiss franc also benefiting, it definitely feels like there's a bit of a flight to safety going on. And if you just look at the composition,
dude, we've been talking about that for weeks. It doesn't feel that way. It's what's happening.
This is tied to worries over the virus and where that could go. And I think there's just a greater cone of uncertainty. When do we get the fiscal package? How big is it?
Cone of uncertainty. That's odd. But okay, I know what you mean.
Uncertainty justifies the market repricing a bit. But in terms of where we're going with the dollar, you've got a current account deficit that's quite large. The bigger thing to me, though, is that you have foreign investors with the largest allocations to the United States, stocks and bonds, since the mid-1980s. And so what's going to get the capital to come into the U.S. to offset that current account deficit, that funding need, and lift the dollar further? It could happen. The U.S. is definitely strong compared to a lot of the other countries out there. But is it going to be strong enough and the outlook good enough to bring that size of capital flow? So I think the dollar is a harder call this year. I would say that you're going to have mixed messages depending on the pair you're looking at. We have the ECB meeting later this week. You could get a dovish statement from Lagarde, just kind of doubling down on her new inflation target. So the dollar might benefit against something like the euro, potentially, but maybe not do quite as well against others.
Earlier on CNBC, Pershing Square's Bill Ackman weighed in on the recent spike in COVID cases and whether he thinks it will impact the overall U.S. economy.
I don't think it's going to change behavior to a great extent. I think people are done, with being in a cave, right? Hiding from the rest of the world. They want to go out. They're going to have fun. They're going to go to restaurants. You're going to see a massive, in my view, economic boom. On the margin, there'll be some people who are afraid. Some people are afraid of getting a vaccine, and they're therefore afraid of going out. But I think we're going to have an extremely strong economy come the fall. I think people are going to return to work in September. And I think companies are going to insist on vaccines, and I think it's a good thing.
So I agree. I think the market's going to do better than we expect overall in terms of like the broad economy, right? Lack of inflation. I don't know if I think individually at every company level we're going to like boom like he's suggesting. And I don't know that people are going to be able to return to work as quickly as he thinks. So while I'm like directionally in agreement with him, I think he's going a little bit further to the extreme than I would take it. I also don't trust Bill very much. So I don't know if he's trying to get bailed out of his positions.
At these valuation levels. So I don't think that's really the play here. But you know what sell-offs do is they make people defensive. They knock down optimism. And they had people generate some cash because they did some selling. So I think that can, slosh back in. But I really disagree with this idea that there's some massive mountain of uninvested money that is just poised to rush back in because the market itself has raised everybody's allocation by going up so much.
Barry, what do you think about sentiment here?
Well, if you think about what Sam Zell once said, that every day you don't sell, you buy. Every day the Fed doesn't talk about more easing, they're effectively tightening. And so all we're debating is whether they're going to taper and when. And so there's no easing going on. You mentioned Lagarde. She came out a week ago, and there was a very, very dovish statement. The Europeans don't want the euro to be strong. And I'm looking at the yen. I think the yen will strengthen. It'll force Japan's hand. They'll have to do something. So that, and then layer on the fact that the Chinese have slowed down, there is some room, some wiggle room there as their yield curve shifts down on a bull flattening for China to devalue the yuan and export deflation. So when you add all that together, I think the dollar goes up. We're going to have a disinflationary shock. I think that high yield spreads at 35-year lows have upside. And I think the financial conditions deteriorate and the PE multiple falls for the S&P 500 in the very, very near term. I think this will all wash through in the next 4 weeks or so.
Well, with that rather bearish answer, I'm pleased that your S&P 500 target isn't lower than the 3,800. But it's very good to get that different perspective, Barry. And final thought to you, Bob. Which stock, in light of this pullback, if you're less bearish than Barry, which is the key stock you're looking at?
Look at AMC, by the way.
Well, I'd mentioned earlier NVIDIA, because NVIDIA had really run up, and part of that is because they're going to do a big split coming up. It's also for fundamentals. They are big addressable markets.
Are you pumping NVIDIA?
Every large growing area, just about every area out there. And so the stock sold off 14% in about a nanosecond. So that, and it's still down, even though it's up, 3+% today, there's still room there. So I think NVIDIA, I could add here with pretty good conscience.
Barbara, Rebecca, Barry, thank you all for joining us. Great to see you.
Thank you.
Oh my gosh, how could you still pump NVIDIA at this point? Oh my gosh, it's like there's so much split hype in it. My concern.
33 cents. That's versus expectations of $2.29. Revenue comes in at 18.75 billion. That's versus expectations of 18.29 billion. So beats there on the bottom and the top. As for the forecast, the company is saying it continues to expect revenue growth for the year. Turning to the big segments, cloud and cognitive software, 6.1 billion. Global business services, 4.3 billion. Global technology services, 6.3 billion. And systems, 1.7 billion. Heading into this print, the stock was up about 10% this year, though it was off about 10% from its 52-week high. And that conference call kicks off at 5 p.m. Eastern. Back to you all.
Be interesting to see if we can get out of their conference call anything about the chip shortage.
Let's bring in Evercore ISI's Amit Daryanani, who covers the stock. Amit, for your first take, it looks like some of these numbers are better than the street was expecting, and that revenue beat with IBM always is going to be key. But some of the breakdown even showed an improvement from last quarter. What's your take?
Yeah, listen, the headline numbers so far look pretty good, right? I mean, you're seeing demand accelerate. Importantly, I would say it's accelerating in the right places. Software, for example, I think was up about 6%. That was up 3% last quarter. So things are definitely moving in the right direction. And I would say all of this is really positive in the context of all the fear one had with Jim Whitehurst, the CEO of Red Hat, leaving. So I do think these numbers look to be moving in the right direction. The struggle beyond what you just said on top line growth with IBM has always been consistency and durability of the top line growth. I think that's what's the key to listen to on the call.
So what is it that investors can't get over on the fact that Jim is leaving, and he's already at Silver Lake told Barron's he would like a CEO role. Clearly, he did not get the top job. Arvind got the top job. So, but why was this such a shock, and why are investors still stuck on it?
Yeah, listen, Red Hat was a big foundational deal for IBM, and I think a big crux of what could drive the success over time was, does IBM and its software business over time look more like Red Hat? Or does Red Hat, which is a good thing, by the way, or does Red Hat end up looking a lot like the legacy IBM asset?
I'm going to jump on over here to Kudlow. Or not. Nope. Okay, looks like or not. All right. Yeah, geez. We've got a big week of earnings coming out as well. I'll tell you a big thing I want to look for are those inflation figures. I really want to go digging around to see what can I find in IBM's earnings call. I'm not going to actually listen to the darn thing. I'm going to wait for the transcript, or I'll 2x play it back. But I'm not going to listen to it live because it's so boring. But I will. I'm writing that down to take a look at this. Because what I'm really looking for is, I could do little trades here or there, and I send my buy sell alerts to those of you in the Stock Psychology Money Group, and sometimes we talk about them on here, sometimes we even do them here. But I'm not so worried about the little trades. I'm more worried about my entire portfolio positioning, and I want to know, like, if I'm going to be wrong about inflation, and we're going to see high inflation, I want to know that sooner rather than later. So know that I'm on high alert. Now, I still think I'm right. I still think I'm 80 to 85% correct that we're not going to see crazy high inflation that we're going to inflect to the downside. It was just my opinion. And the good news is me saying that is not like politics, where it's like if you say you're a Democrat or Republican, like identity politics kills you. At least if you say you believe inflation is going to come or you don't think it's going to come, it's not that big of a deal. You can have a conversation about it, right? So that's not bad. But these earnings reports for sure are the key, in my opinion, for identifying some inflation factors and seeing if the executives can give us some insights into what to expect. Yeah, exactly here. Chip shortage may ease in Q3. Sure, I expect more of that. All this flashing around here is kind of annoying. There we go. Let's do that a little bit. We're just waiting for news to come back. I got a twitch when you said identity politics. I know, right? Yeah, IBM earnings came out. I'm waiting for their earnings call, and that takes place, I believe it's at 5. Either way, I'll check back later when I can actually 2x it and the darn thing's done. Yeah, let's see here. Oopsies. All right. Oops. Did not mean to do that. Sorry. Okay, perfect. All right. So yes. Netflix. Tomorrow's going to be a big day for earnings. Let me give you a quick little preview for tomorrow. So tomorrow, Tuesday. Oh yeah. Ooh, the next 3 days are going to be intense. Tomorrow morning, Ally Financial, Halliburton. Let me say it correctly. Sorry. Philip Morris, Travelers. This is all of the morning. I don't cover the morning ones. I'm sorry. Synchrony. I mean, we'll cover them when when we do the market open, maybe, but we're not going to cover them live when they come out. But what we will cover is probably Johnson & Johnson. Oh, I'm sorry. Let me go to after. Nope, not going to cover Johnson & Johnson. Tuesday, after. Here we go. Netflix, yes. United Airlines, yes. Chipotle, yes. I am very curious to see how Chipotle is going to do with the year over year. Sleep Number Corp, maybe. Let's see. What else? I mean, there are a bunch of them. Those are the big ones tomorrow. United, Netflix, and Chipotle. And then Wednesday, in the morning, we get Coke, Verizon, Johnson & Johnson, Anthem, NASDAQ, Harley-Davidson. And in the after hours, we get, I'm just reading some of the big ones here, Texas Instruments, Whirlpool, Kinder Morgan, Discover, Sallie Mae, Equifax. Okay, that's a little boring. Thursday, we get AT&T, American Airlines, Domino's, Southwest, those before the bell. And then after, we're going to get Snap, Twitter, Intel. Ooh, this is going to be a very fun week. VeriSign. Going to be fun. That's going to be fun. Yeah, there are two types of EPS. There's adjusted EPS, and so you have to see. Oh, my mouse upside down. See which EPS you're referring to. But yeah, earnings per share would be the net earnings divided by the amount of shares outstanding. Subject to sometimes some adjustments, but again, that's why you have the adjusted EPS. Okay, yeah. So that'll be very interesting to see. Let's see what we got here with Kudlow for a second, because this is going to impact the market too.
On the show last week, I heard him on Sunday, heard Bill Cassidy on Sunday. The pay-fors are very vague, Senator Haggerty, and that doesn't work for Republicans. It shouldn't work for anybody. But what do you hear about these pay-fors?
Well, I think one of the big ones is the IRS enforcement that would have really pushed the IRS to harass Americans even more. Seeing that off the table, I think, is a great relief to many Americans. And you've heard Senator Manchin say this. He doesn't want to pass something that's not going to be paid for. Well, right now, we can't see a way to pay for certainly the three.
It's still stuck on Manchin. Wow, that's crazy.
Which, Larry, it's not what you and I would call reconciliation. It's, in fact, just a reckless runaway spending bill that the Democrats are trying to push through on a partisan basis. You add that to the bipartisan package.
All right, well, I'm going to pull off the political talk because Kudlow's letting a lot of that get away. But then again, Kudlow likes it. He's like, that's right. Rail on him some more. You give me some more of that. Oh, gosh. So here we go. Spirit Airlines, 3.38%. Ooh, look at that. Spirit jumping. What it lost today, Spirit, guys. See, this is a little bit, and this is just one stock, so I don't know. But I was a little bit thinking that today was potentially, like we would know if tomorrow, and we'll see tomorrow, if recovery keeps selling off or are we going to balance it out again, right? Because I think this move into stay-at-home stocks like Zoom and DocuSign or Peloton or whatever, I think that's a little overblown. Now, don't get me wrong, I love Peloton. Okay? I want to see Peloton go to the moon. Okay, what do we got here? So on the downside, well, you got Darden on the downside in after hours here. No, not really a clear indicator yet here. Unity, Blue Apron gave up a little bit again, but it did well today. Wayfair's still up today, so that's another double up. Lemonade coming back. AMC up a little here in the afters. Tattooed Chef back up a little. Good. Tesla up on the day and up in after hours. Wow. Wow. After today. Woo. That's something else. That'll be very fascinating to keep an eye on. Okay. Gosh. Well, honestly, I think that about does it. I think that's a good one. So I appreciate y'all being here for Market Closing live stream. Make sure to check out the programs link down below. Get that 40% off before it expires. I think, what is it, 2-3 days? Something like that. Anyway, the 22nd. And cheers. We'll see you. Thanks.